people are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year.
I'm talking with the Secretary when we get home. I am considering it. We do not impose any of those tariffs. They're imposed by the last administration, and they're under consideration.
I think there is a lot of demand for starting to rebuild bridges, cooperating again.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Monday, the 23rd of May. I'm Francine Lacqua in Davos for the World Economic Forum, and here's what's coming up on today's program. European stocks surge after Joe Biden hints at a relaxation of Trump-era tariffs. U.S. futures also gain after the S&P sidesteps a bear market close. U.S. President Joe Biden says he will intervene if China invades Taiwan. Speaking alongside Japan's Kishida, the two leaders present a united front against Russia. Plus, the World Economic Forum in Davos kicks off. Stay tuned for an outstanding lineup of interviews, including Canada's Innovation Minister and the Chief Executives of Mahindra & Mahindra and Standard Chartered. Now, first thing is first, so let's check on the markets, especially since it's a sunny day here in Davos, and the markets aren't doing too badly either. Now, the story is one of China. The story is one of trade out there. Let's get the board up to look at the European stock 600. It's very clear that both stocks, but also the Chinese renminbi, advanced after Joe Biden said China tariffs imposed by the Trump administration were under consideration. I'm looking at dollar, treasuries, both retreating. Now, if you look at energy and basic resources, those shares actually leading the gains in the Europe stock 600. U.S. equity futures also jumping more than 1%. Stocks rising in Asia and emerging markets. We had a good conversation with the IMF head about the dollar rally and what that means for some of the countries that may need debt restructuring and that it may also need the IMF support going forward. So we'll have a full roundup of markets. When you look at the European map, a lot of green on the screen, just a bit of pressure on the Italian FTSE MIB. But overall, again, if it means less tariffs, this is something that would be considered beneficiary to the world. Now, the U.S. has reached a trade deal with Asian economies. The pact brings together countries worth 41% of global GDP. Now, for more, we're joined by Bloomberg's chief Asia economics correspondent, Enda Kern. So, Enda, first of all, good morning. What more can you tell us about this deal?
Well, it's early stages in this, Francine. It seems to be basically a loose kind of economic framework, like you mentioned, about a dozen members in Asia, including some big economies like India and Japan, South Korea, Australia, a handful from Southeast Asia, 7 from Southeast Asia as well. There are 4 pillars to it, centered on themes such as a clean economy, the digital economy, a resilient economy. That's about basically getting ready for future kind of disasters and shocks, for example. And so the thinking is that these countries will come together and coalesce in these matters. But it's not a deal to bring down tariffs per se. There isn't any guarantee that the US Congress will necessarily weigh in, and it's not yet clear which of those countries who've signed up are really on board for which pillar and for which part of this Indo-Pacific framework. So, as I say, it's kind of a US push in the region again. It's first since the pulling out of TPP back in 2017, but it's not necessarily a major kind of trade agreement, and a lot of the details have yet to be worked out.
Yeah, so, and if you look at stocks around the world, I mean, they're really taking this in their stride. They think this is great. Does it just show that globalization is not dead, that would benefit actually markets, or are they getting ahead of themselves?
Well, I don't think this particular framework is going to be a game changer, Francine. I mean, again, the details remain to be seen, but when you look at what we do know, it's not about bringing down tariff barriers, for example. It's more about cooperation on some of these core pillar areas, and it remains to be seen who signs up to what exactly in those pillars. Well, I think perhaps the other takeaway from today's trade story is the China and the US perhaps going to start talking about bringing down some tariffs. President Biden making the point that he could reduce some tariffs on US goods. That's probably more, though, about the US inflation story than any kind of warming of US-China relations, because China themselves were quick to make the point that they view this new Indo-Pacific economic framework as divisive. So I would say this particular framework doesn't necessarily appear to be a game changer for markets, and neither, of course, will the reduction, I think, in tariffs be a game changer for US-China relations.
Is it a game changer, the fact that the President of the United States of America actually said that the US would intervene if China were to attack Taiwan?
Well, obviously, it's a very hawkish comment. He was asked a direct question. He gave a direct answer, Francine. In the same answer, though, he did also say that the US is committed to the One China framework that they have agreed already. And in fact, his spokespeople afterwards are making the point that the president reiterated the One China framework of strategic ambiguity, so to speak. So again, it's a hawkish headline and it will generate a response from Beijing. It does show that the US is committed to Taiwan, and in the context of what's happening in Ukraine, of course, it's a very significant remark. I think, though, the question remains, is it really a game changer for the US-China relationship over Taiwan? That will be debated by the experts, but I think he did reiterate sticking to the One China framework. Taiwan is not included in the new Indo-Pacific framework that was announced today either. So those are kind of points that add to the kind of ongoing status quo of the US, China, Taiwan sort of relationship.
Enda, thank you so much, as always. Enda Curran, our Chief Asia Economics Correspondent. Now, let's also get into the key drivers, market drivers, with our MLive editor, Noor Ali. Noor, great to speak to you, as always. I guess less recession concerns, less inflation concerns, and the market's really latching on to what we heard in terms of trade deal.
Yeah, absolutely, because any sign of a reversal of the Trump imposed tariffs on China is a good thing for Chinese stocks. And in retrospect, that's the positive contagion finally coming through from Asia. Typically, when we see Asia rebounding, you do see a bit of that good news coming into the European session, and that's exactly what we've got this morning. But the question is for how long?
Yeah, so if I was going to ask you, Noor, just to put you on the spot, because, you know, it's a Monday, it's for how long? We were almost on the verge of a bear market, and then we see that reversal. How much volatility are you expecting?
I think this week might be a good week for stocks in the short-term interim, hoping that nothing else happens. But I think that's a little bit difficult to ascertain, right? We did just run an MLive survey where, you know, the median or majority of the responses expect another downfall for stocks, about falling to the S&P 500 is expected, according to survey respondents, to fall to 3,500. It's now trading at the 3950 level or so. So I do think that the market is a little more pessimistic than we would expect, but the dip buyers are still trying to make a comeback. Let's see if they'll last.
Noor, anything else that we should be watching out for, which is maybe not on everyone's radar? So I know you look at FX, you look at currencies in, you know, great detail. Is there anything in terms of the dollar rally that we should worry about if it goes much higher from here?
I think the dollar rally, as we've been flagging on the Markets Live blog for quite some time, has fizzled out. I think also this is good news for commodities. This is good news for emerging markets. This is providing temporary relief for emerging markets currencies that have just been battered by this rallying dollar. We are seeing a bit of, you know, it has come down off these highs, and I don't think the dollar is king narrative sticks through just yet. You do have recessionary pressures or fears coming on. You do also have inflation. And now, if those tariffs do come out or unwind between China and the US, that imposes some pressure on inflation because the yuan would rise. And so, you know, we do import a lot of goods from China. So ultimately, I think we're narrowing in a very tricky situation for the dollar. And I don't think it can hold its haven trademark for long.
Thank you so much. Our MLive editor there, Noor Ali. Now, coming up, we speak to Canada's Innovation Minister, François-Philippe Champagne. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. It's day one. We'll have then day 2, day 3, and day 4. Of course, the focus is on Ukraine. The focus is a lot more on this inflation surge, what it means for energy security, and of course, how the world can cope and whether we tip into a recession. So we're going to have some great discussions, not without their critics of Davos. So we'll see exactly what happens over the course of the week. Now, joining us to talk more about Davos, his expectations, maybe some of the things that he would do different opposite is François-Philippe Champagne. He's Canada's Minister for Innovation. So, Minister, thank you so much. Great pleasure to catch up with you in Davos. It's not winter.
As a Canadian, it's quite a difference, trust me. But it's good. I came here almost 20 years ago. My first Davos at the time, so things have changed. But I would say, I said that to Klaus Schwab yesterday, Davos always remained relevant. I think today there's a lot of emphasis on energy security, climate change, obviously the war in Ukraine.
But, Minister, what are you here to do? Is it business because you need to meet with suppliers? I know we'll talk a little bit about Huawei in a second. Or is it really to try and be part of this glal voice of what should happen?
It's a bit of the two. You know, one of the reasons you're here is to, in my case, is to make the case for Canada. You know, I think that top of mind for people are energy security, where I think Canada can be part of the solution. You mentioned supply chain, which are becoming more regional. So the whole issue around critical minerals, how can we help? The whole concept of ESG. And last week, I spent the whole week in Germany, and honestly, listening to a lot of German businesses. We're trying to see how Canada can play that role, greening the supply chain. How can we help? And obviously, to your point, how can we help in the global agenda as well?
Yeah, so how tricky are supply chains right now? I know we're talking about green supply chains, but really it's getting from A to B, getting some of the shipping costs under control that would help the world first.
Well, what we've seen from our perspective, you know, we have a big auto sector. We've rebuilt the manufacturing sector. We see global supply chain becoming more regional, certainly more emphasis on resiliency than pure efficiency. Germans have called that local for local. So when you're looking at that, at least in our case, in the context of North America, thinking about critical minerals, thinking about how can we make sure that we use our renewable energy to green our supply chain, whether it's green aluminum, green steel, green batteries. How can we power the world with greener solution? This is really the theme. So talking to business people here, but also wanting to influence the global agenda. I think the imperative is there, and we have solutions.
But, Minister, Canada is still so reliant on fossil fuel.
Well, I would say part of it, but I mean, you have to remember that if you look at the, you know, the production of renewable energy, we're close to 80% in Canada. So electricity, I mean, everything is becoming electrified in a way. We've removed, for example, in the steel industry, we're moving to electric furnace. So we're trying to decarbonize in order to be able to, for example, in our case, produce the car of the future, which are going to be much greener.
Yeah, I mean, you know, the critics will say that actually Canada could have done a lot more when it came to climate change pledges. And the question is whether that changes in the future. But talk to me about Huawei. So this was the big news right, in the last 10 days, the banning of Huawei.
Well, we decided that our intention was to exclude them and ZTE from our network, the 5G network in Canada. This was the right decision. It was the right decision for Canadians. It was the right decision for national security. But also considering what the 5G is going to be in terms of our lives. I mean, as you know, there'll be many points of connection. So protecting the network is very much aligned with what our allies have been doing in Australia, the United Kingdom, the United States, and certainly this was a decision that we made after consulting with allies, but also our own intelligence agencies.
Minister, what are you afraid of? So, I mean, 5G, again, it's, you know, shorter frequencies. Is this because it's a foreign entity, or is it because you're worried that the Chinese would be spying?
Well, we had to look at a number of factors. As you know, when you make these decisions, they were very much informed by intelligence reports. You would expect I can go into the details of that, but certainly I think that our conclusions are very much aligned with others in the sense that we want to protect the integrity. You know, if you look at the digital world today, the network infrastructure is going to be vital. I mean, people think about physical infrastructure, but if you think of the world, the digital world we're going, these networks, which are going to be with us for decades to come, to protect them, to make them more resilient, to make sure that there would be no state or foreign actors that could eventually play in the network for us was key in order to protect that for generations.
Because this, and I know it's like intelligence reports you can't, but what's the danger in this? Is it components inside? Is it listening into conversations? Like, it's unclear, you know, when countries ban it, it's still unclear exactly why or
when
what the danger is.
When you talk about national security, it's a whole range of things. You know, you've heard that from our American colleagues, from our British colleagues. I think our conclusion, like I said, is very much aligned. We've been talking to a number of allies on that. And I think when you come to national security, the viewers will understand, I always work on the base of prudence. You know, you have to be prudent. You're talking about one of the most critical infrastructure that will drive our economy in a way will impact the daily lives of Canadians in our case. So prudence is certainly, in my opinion, what you need to apply when you're looking at that, especially that you want resilience for decades.
Minister, what are you expecting here? So are we becoming global, deglobalization, or is it, it seems like, so we went into Davos where a lot of people say, you know what, it's going to be very difficult. Everybody has a mind of their own. They're thinking internally. And then we wake up and there's news that actually the U.S. signed an agreement with 13 other countries in the Asia-Pacific region.
I think it's a bit of both. In a sense, I see supply chain, like I said, being more regional, but I do see that, stability, predictability, and the rule of law are in high demand and short supply. That's for sure in the world. So certainly countries like Canada, we've been working with a concept of trusted partners and making sure we're more resilient. You mentioned a number of things. We went from vaccines now to microchip. With my colleagues in the United States and Europe, we're always saying, okay, what's the next thing? How can we plan for 30 years ahead so we don't find ourselves in where we have been with respect to vaccines? So there's a sense that we will need each other, that there are some economic blocks being formed. There's certainly a race to standards and norms that will dictate some of the products that we'll see and technologies that will come. But I think there's also an emphasis on science, technology, and innovation, because that's where you find the breakthrough.
Thank you, Minister. How many languages do you speak? Because you have to understand, Minister Champagne sat down and spoke to me in perfect Italian, and that took me by surprise.
Well, three of them.
Three.
But this is kind of being, Canada is this inclusive society, so it's not uncommon for people to speak 2 or 3 languages in our country, just like you do in Europe.
I mean, three languages for now, and then I'm sure by the time Davos is over, he'll have picked a 4th one. Thank you so much for joining us. François-Philippe Champagne there, Canada's Minister for Innovation. Coming up, stocks gain after President Joe Biden says China tariffs imposed by the Trump administration were under consideration. We look at what's moving markets today, and this is Bloomberg.
If only I knew.
You don't know.
I know, but I can't tell you.
I don't have the crystal ball at all. Like, mine is just dark when I look into it. I can't see anything.
I think we're getting close to it, actually.
When you look at the trend, it's still pointing downwards.
We still have further to fall.
I think we're going to end the year slightly higher than where we are today.
Once we get past that and get some clarity from the Fed, I think the markets will ease up.
You're going to need more than that to sort of stop this fall.
We think that over the summer, the S&P could touch down to around about 3,600.
If somebody here has the bottom indicator, just my phone number, I'd love to know that.
Well, that was our MLive survey, considering when the S&P 500 might hit rock bottom. Now, for more on this, we're joined by Danny Berger. Danny, good morning. What level do the majority of our respondents expect the S&P to get to?
Well, Francine, a lot of different opinions. I want to show them. I'll get to this screen I have in front of me in just a moment about the economy. I want to show you the levels first. We do have a graphic of this. And essentially, only 4% of the survey respondents in the MLive Pulse survey, which surveys about 1,000 people, see a bottom. Only 4%, Francine. Now, the majority of them see the S&P convalescing around 3,600. That would be about a 10% drop from the current levels, a 27% drop from the January high. It really is this mantra of don't fight the Fed. The Fed has been very clear that they want to tame inflation. There you go. There's the chart right there. So here's where the majority are, around 3,500. So you have the Fed saying they want to tame inflation. To do so, they're going to tighten financial conditions. And what tightens financial conditions? A sell-off in stocks. So if you believe that, you even get some people here saying that we might see a retest of the pandemic lows around the 2,400 survey response level. So Francine, a lot of different opinions, and I should say the professionals, the pros who it is to say where the S&P will end, those are also one of the most split in the past decade.
Yeah, could I just say, Danny, I didn't do very well on that survey because I asked all of my guests and none of them would give me a level. So they're kind of like,
no one wants to give an answer. It's fine.
A little bit lower. I know, because then you hold them account to it. Danny, thank you so much. Danny Berger there with the very latest on the survey. Now, we're just also getting some breaking news out of Christine Lagarde. This is her comments in a ECB blog post saying that the ECB is likely to exit negative rates by the end of the third quarter. Madame Lagarde, president of the ECB, also says the ECB can design, deploy new tools if needed. So this is the big deal, of course, out of Christine Lagarde saying that they are also expecting to end net purchases very early in the third quarter. Don't miss our exclusive interview with Christine Lagarde from Davos. That's tomorrow. That will be a good conversation to try and understand exactly her thinking also on negative rates and what we could do better to alleviate some of the concerns from some of course, the people that are hit the most by this inflation rampage. Coming up, the U.S. reaches a trade deal with Asian economies. The pact brings together countries worth more than 41% of global GDP. So we have more on President Biden in Asia next. This is Bloomberg. European stocks bounce after Joe Biden hints at a relaxation of Trump-era tariffs. U.S. futures gain also after the S&P sidesteps a bear market close. The American president also announces a new U.S.-led Asia-Pacific trade pact made up of 13 countries. He says he will intervene if China invades Taiwan. Plus, the World Economic Forum in Davos kicks off. Stay tuned for an outstanding lineup of interviews, including the chief executives of Mahindra & Mahindra and Standard Chartered. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua, day one in Davos. Now, the U.S. has reached a trade deal with Asian economies. The pact brings together countries worth 41% of global GDP.
The United States is deeply invested in the Indo-Pacific. We're committed for the long haul, ready to champion our vision for a positive future for the region, together with friends and partners, including the nations in this room. That's why I believe we will win the competition of the 21st century together.
Now, for more, we're joined by Bloomberg's chief Asia economics correspondent, Enda Curran. So, Enda, what more can you tell us about this deal?
Well, we're getting some meat in the bones of this kind of framework now, Francine. There's about a dozen members in it, some big economies like India, Japan, South Korea, then around 7 from Southeast Asia. There are 4 pillars to it that will include topics such as resilience, so preparation for the next economic shock or disaster. There's a focus on the digital technology and on climate change, among others. Now, that's the kind of outline of it. We don't have much more detail beyond that just yet. For example, it doesn't deal in areas such as bringing down tariffs or trade barriers. That's not part of what this is about. And of course, we don't yet know how much political support it will get on the US side of things either. The details of this will be worked out over the coming weeks and months in terms of which country is going to sign on to exactly what part of this agreement. It's kind of a US effort to get going again in the region after pulling out of TPP back in 2017. It's their way of countering China's economic weight. Of course, China is saying this is another divisive measure by the US. So, as I say, it's some detail on its initial idea by the Biden administration, but probably has a way to go yet before we have a full idea of how it will operate and what it will mean economically.
All right, Enda, thank you so much. Enda Curran there with the very latest, of course, on all of this region and the intricacies and interlinks between them. Coming up, Volkswagen and Mahindra are aiming to electrify the Indian autos market. We'll be live in Davos with the managing director of Mahindra & Mahindra, Anish Shah, about their plans. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, Credit Suisse Chief Executive Thomas Gottstein says he has a clear mandate from the board to continue in his position. Gottstein has come under pressure because of a string of scandals. He was speaking to me a bit earlier on, and here's what he had to say.
With the high inflation shocks that we see now in certain areas of this world, it's very clear that people are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year. They have come down. And if you look at certain markets, whether it's equity markets or high yield markets, they have clearly come under pressure.
I mean, under pressure, they've been a bit crazy.
Yeah, well, they're basically been pretty quiet, let's put it this way. But our clients, they don't panic. You know, they are looking at how things develop. And they stay engaged, and that's very important for our wealth management clients and our wealth management relationship managers, that they stay in front of the clients, and that's what I'm really focused on.
So there's no, you're not seeing any outflows, they're still fully invested?
Well, what we did see, like many of our competitors, is some deleveraging as part of assets under management going down, certain equity prices going down, but some deleveraging, especially in Asia. And obviously with what happened in Russia and in some other parts, that AUM have gone down, but no outflows as such, no.
Does it actually hurt your ability to collect some of the fees in certain parts of the markets with some of your wealthy clients, or not so much?
Well, if you look at our three revenue streams, so net interest has come under pressure because we had lower lending volumes. But now with interest rates going up, that should be a positive element going forward. Recurring revenues have also come down because of lower AUMs. And transactional revenues actually have started to stabilize now. Volatility sometimes is a good thing for transactional revenues, so have started to pick up. But it's clear that 2022 will be at lower levels than last year.
That was the Credit Suisse Chief Executive Thomas Gottstein speaking to me a bit earlier on here in Davos. Now let's stay in Davos, and we're at the World Economic Forum. Earlier we also spoke to the forum's managing director about, of course, what she's expecting in the next 4 days. She's Sadia Sahidi.
More than 2,000 leaders coming together again 2.5 years after the last time that we met. I think there is a lot of demand for starting to rebuild bridges, cooperating again, the serendipity of connection between people. Of course, so much work has continued here at the forum in the virtual world as well, but this is the moment to actually really lock that down.
I mean, the star power that we had in the past doesn't seem to be showing up this year. Does that change the way you work?
50 heads of state, 50 ministers of finance and central banks, and the economy is one of the key topics. So I think we've got really the right set of people to make this the right kind of serious working meeting to ensure that we make progress on the issues that matter today.
What do you say to the critics that say, look, Davos is very nice, but it's all the elite, they come together, they talk, but there's never anything concrete that comes out of it?
Look, day one, right? We're going to have President Zelensky speaking to kick off this meeting. And then 2 days later, we've got over 100 CEOs coming together with all of the Ukrainian government leaders and young people that are here in person to start working already on what it is that they could do to support Ukrainian refugees in Europe, and at the same time start thinking now about a sort of Marshall Plan for rebuilding Ukraine in the future. That is the type of thing that will be happening here at this meeting. And of course, I can give you several examples from reskilling, jobs, climate, so much that moves forward. But of course, it doesn't sort of, start at this meeting and it doesn't end at the meeting. It's ongoing sets of work.
So you have Ukraine, you have, of course, inflation concern, economic concerns, you have climate change. What do you think the biggest worry right now is for a lot of the elites, maybe away from the war in Ukraine?
I think a big focus is going to be the economy, right? So if we just look under some of the technical terms that we're all focused on, what this means right now is a cost of living crisis. What we're talking about here is a real impact on people's lives and livelihoods. We have, after a very long time, a major risk of famine, of hunger, of starvation, and making it very difficult for people to make ends meet. So a big part of that will be the focus here. How do we ensure that we not just get emergency aid to those that need it, but also how do we get this system rewired so that we don't have these issues in the future?
That was the WEF Managing Director, Sadia Zahidi. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources tell Bloomberg that Broadcom is in talks to buy cloud computing company VMware. The chipmaker has been making a series of purchases as it looks to expand the business into one of the largest and most diversified in the industry. VMware has a market value of about $40 billion. Now, the FT is reporting that HSBC has suspended an executive after he downplayed the risks of climate change. Stuart Kirk is the head of responsible investing for the bank's asset management unit. He criticised HSBC for paying too much attention to climate and other environmental and social issues. The HSBC CEO Noel Quinn says his remarks are inconsistent with the bank's strategy and do not reflect the views of senior management. And Saudi Arabia's sovereign wealth fund has bought a 17% stake in Prince Al Walid's investment company for $1.5 billion. Al Walid will retain a 78% stake in Kingdom Holdings, while the remaining 5% will be listed on the Saudi bourse. The investment brings the billionaire prince closer to the Saudi government after years of operating independently. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, we're here in Davos, day one. We have 4 days. A lot of the conversation will be on a possible Marshall Plan for, of course, Ukraine. We'll talk about inflation. We'll talk about recession. We'll talk about everything in between, which is the inequality out there in the world. But I'm delighted now to be joined by the Standard Chartered Chief Executive Officer, Bill Winters, for a robust conversation on the economy and what we should be worrying about. Well, Bill, as always, thank you so much for joining us. Last time I saw you in Davos was January 2020.
Yeah.
It was right at the beginning of COVID-19. And now they're back, and it feels like the world has really changed.
Yep.
Do you worry about a recession? How much do you worry about the cost of living?
I worry about a recession, and I worry about the cost of living, and the two things are clearly linked. But I'm pretty encouraged by the overall level of economic activity, which remains robust. I know that central banks have some really heavy lifting to do in order to get inflation back under control. It's clearly going the wrong direction right now. And the likelihood that that translates into a material economic slowdown is high. Does it tip us into recession? I know everybody will have their view.
But Bill, so, I mean, is there anything that banks actually can do to alleviate that? Or is it up to governments? Like, it's unclear whose responsibility after 2 years of COVID it is now.
Well, I think the responsibility for inflation is squarely with central banks. And to the extent that they're able to exercise that responsibility, there will be higher interest rates, and that will lead to lower economic growth. I think that's inevitable. That is the transmission mechanism. No getting around it. But I think there's a real question whether, when push comes to shove, whether the Fed and others really go all in on the inflation containment versus maintaining a level of economic growth. And we'll see.
Do you think there's a policy mistake in the making from central banks?
I don't think there's one in the making. I think we can all speculate on whether central banks should have moved earlier. But we know that there's been a series of supply shocks as well that have taken place that the central banks realistically couldn't have forecast. But yeah, clearly, the confluence of events right now is to make the central banker's job very, very hard.
Bill, if we do have a recession, I mean, you've lived through the global financial crisis. Would it be different from that? Is it more like an 80s pattern? Because we talk about recession, but actually recessions are all different.
I think that the really big difference between recessions is, does it trigger a financial crisis or does it not? And thankfully this time I'm pretty sure that there would not be a financial crisis because the financial system is extraordinarily strong. So we obviously got a lot of things right after the financial crisis, not least increasing bank capital levels, liquidity levels, fewer places in the non-banking sector to hide. And that's very encouraging. So I think the likelihood that a slower economic growth translates through to a credit crisis / financial crisis is very low. And typically when you have recessions or credit cycles that aren't linked to a financial crisis, it's not so severe. So I would hope that if we do go into recession, it feels like it's a dip in growth coming back out rather than something more structural.
I mean, this morning we also had this agreement, this accord between the U.S. and 13 Asian nations to have a trade pact. I don't know whether this means that we're going to see more globalization in certain parts of the world and deglobalization in other parts of the world, but how does it change how you run your bank?
There's certainly shifting trade patterns, and I would say broadly these are good things for Standard Chartered Bank. There's much more intra-Asian trade and trade amongst the global south, which is those are our home markets. At the same time, we know for sure there's going to be onshoring into the U.S. and Europe, both for security of supply, but also for job creation. We can look at the unemployment rate and say, how much job creation do we need? But we know that nevertheless, high-quality jobs is a priority. So we're in a state of flux, and I can see some very good things for the global economy. I can see some things that will lead to further inflation.
Yeah.
But all this onshoring and domestic sourcing of supply is inflationary.
Yeah.
It's structurally inflationary, which makes the central banker's job ever harder. But perhaps it's for the best in terms of getting a stable geopolitical environment.
Bill, if you look at HSBC and, of course, one of their main shareholders, Ping An, trying to break up the bank, I mean, how do you look at it from what it could mean for Standard Chartered?
Look, we're totally focused on just running our business. We're having a very good time right now. Trade is increasing. We've got the bit of a tailwind of higher interest rates. Credit quality for our bank has been very good, and income growth is strong. So we feel our strategy, as we've got it articulated, and we're very specific in the guidance that we gave the market back in February, it's working. That strategy is working. I'm skeptical of sort of these inorganic solutions where you end up taking something that is a reasonably well-functioning integrated whole and splitting it up in pieces. I think that certainly for Standard Chartered Bank, the cost would be much greater than the benefit. But thankfully, nobody's suggesting that in our case.
I mean, do you see Standard Chartered evolving? I know you've been in charge, what, 7 years? Did you get it to where it needs to be, or do you see it, changing a lot more from where it's now?
We've been pretty consistent with, certainly for the past 5 years or so. We had a couple of years of cleanup when I arrived. For the past 5 years, we've been focusing on growing our cross-border corporate business, growing our proposition to affluent customers, digitizing everything that we do, and then more recently, a real focus on sustainable finance. Those 4 things have stood us in very good stead. So we definitely took a step back during the pandemic as a result mostly of lower interest rates, 0 interest rates. As interest rates are normalizing, we're right back on track. We've got a high degree of confidence that we can hit our financial targets. We set a very specific target for 2024. My comment when we rolled this out in February was, if not earlier,
okay,
which obviously means next year.
And you're sticking to that? If not earlier? You think it'll be earlier?
I hope so. I hope so. I mean, the guidance is the guidance. 2024 is what we're shooting for. But interest rates are going up a little bit faster than the market had expected, even when we spoke. And the business still feels good.
Bill, thank you so much for joining us here in Davos. Bill Winters there, the Standard Chartered Chief Executive Officer. I'm not crying because of what Bill is saying. It is very, very bright here in Davos. Coming up, Volkswagen and Mahindra are aiming to electrify the Indian autos market. We'll be live with the Chief Executive of Mahindra & Mahindra, Anish Shah, next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, in London, Davos, it's the sun, it's not the sun. I mean, Volkswagen exploring the possibility of supplying electric vehicle parts to Mahindra & Mahindra as the German automaker looks to tap into the enormous growth potential of the Indian market. And here we have a good conversation, of course, about a very successful global business and what they need to do to go into the next step.
You're right, and when you talk about India, this is the 5th largest auto market in the world. So it is important where India goes from here when it comes to EVs.
Yeah, and we have a great guest to talk about this.
Exactly. Anish, good to have you with us, CEO of Mahindra & Mahindra. Anish, good to have you with us. We talk about this drive towards EV. I mean, it is a huge market in India, but, one of the criticisms against Mahindra & Mahindra is that perhaps your EVs are not at global standards. How are you rectifying that to ensure the adoption and perhaps it attracts, the global markets?
So, Aslinda, it's a pleasure to be here with you. And obviously beautiful in Davos this time. It's always pretty in winter as well, but we don't have to worry about the snow and the ice. So it's lovely here. And the snow boots. And the snow boots, yes, of course. So with regard to EV, I'm going to first talk about three-wheelers, because EV does tend to focus a lot on the four-wheelers only, but there's a huge set of things around it, three-wheelers, commercial vehicles, and so on. In three-wheelers today, we've managed to get everything that's required for the consumer. Low cost of operations, range anxiety being addressed, and the infrastructure that's required, because swapping in three-wheelers is easy. And from that perspective, that market's going to take off very quickly. Mahindra today has a 70% share. We've made ICE three-wheelers as well, and we've seen that transition go from 25% of our vehicles being EV in three-wheelers to 70% in our portfolio as well.
So in terms of market share, what are you looking for? What are you targeting 2 to 5 years, realistically?
So on three-wheelers, we will continue to maintain the market share we have. It may come down a bit with competition coming in, but we do expect to have at least over 50% as we go on. On the four-wheeler side, we do expect to get leadership back. And if I were to answer your question directly, yes, the cars, we've been making EVs since 2008, but they were with old technology. And the market in India has taken slower to develop. It's taken a little more time for a variety of reasons. But we are seeing India at the cusp of embracing EVs and moving forward. And we have very exciting plans for a whole range of world-class EVs that will be launched in the next 2 to 3 years. We have a huge reveal that's planned later this summer.
Who's your biggest rival? What do you think of Elon Musk?
Our rivals are around the world. And if you go back 20 years, Indian manufacturers was written off because we had all the global manufacturers coming into India. And we survived and thrived. And if I were to just give an example of a world-class car in ICE, we launched the XUV 700 a few months ago, and we sold 50,000 cars in 3 hours, which is a global automotive record. And we have 11,000 bookings every month since then. So we have the ability to make world-class cars. We managed to compete very well with everyone who's come in from outside India because we managed to deliver cars that the Indian consumer wants. And that's something we feel confident about as we get into EVs as well.
It is about supply chain disruptions. It is about chips. Automakers have been hard hit. When will we see an easing? When will we see the end of this chip shortage?
So the world as we see it today is going to have one challenge after the other. So that's one thing COVID has taught us, is find a way to deal with it, be resilient. Today, chip shortages have eased significantly. So they impact about 10 to 15% of our production overall. And that's something we've been able to manage with a variety of things that we put in place. But there will be challenges that come up. It's supply chain impact due to the Russia-Ukraine crisis. It's China lockdowns impacting us as well. So it's a whole host of things, and we're working through those.
More challenges. So you're expecting more challenges to come at the forefront?
The way the world's going over the last few years, yes, there are more challenges we're expecting. We don't know what they are today, but that's something we'll just have to be ready for.
India's economy is slowing, but still 6% growth. I mean, inflation is surging. How do you think it all can be fixed, and how will it impact companies like Mahindra & Mahindra?
So India is positioned very well in the world today because inflation hasn't gone up as much as compared to the Western markets. Yes, we've seen an uptick, but it's 200, 300 basis points. I would not expect a significant rise in rates. RBI, the Indian Central Bank, has been proactive in taking action already. And we don't see a significant decrease in demand. We've had commodity prices go up over the last 2 or 3 years. And despite that, we've seen good demand for automobile, tractors, our hospitality business, real estate business. So things have been very strong. So from that standpoint, I would say fairly optimistic about India, despite the challenges around. A level of caution there as well, but overall pretty good.
Sir, thank you so much for joining us. Anish Shah, their Managing Director of Mahindra & Mahindra, joining us today. Also, thank you to Haslinda. I love Davos because I get to catch up with Has. Bloomberg Surveillance Early Edition continues in the next hour. We'll have plenty more from Davos throughout the day. Tomorrow, an exclusive interview with the ECB President Christine Lagarde. You don't want to miss that one, but we'll have plenty more all week. This is Bloomberg.
We have to navigate the next few months. We need to navigate the rising rate environment.
I still think that the capitulation is to come.
When every single headline is negative, it's time to buy.
I still think the worst is not behind us.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, May 23rd. Our top stories today. U.S. stock futures rose after the S&P 500 narrowly missed a bear market close. Still, a new survey of finance professionals sees the index losing another 10% before bottoming out. President Biden says the U.S. military would defend Taiwan if China attacks. Meanwhile, the president is reconsidering tariffs imposed on China during the Trump administration. And the Davos Forum is back with fewer Russians and billionaires and no snow. But we will hear from the CEO of the Hong Kong Exchange and the chairman of the State Bank of India. A very warm welcome to the programme, everybody. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Chrissy Gupta and Kailey Leinz over in New York. Matt Miller is off today. And Kailey, European equity markets certainly looked suspiciously positive earlier on this session. Some of that positivity, though, has wound back a little bit as we've gone through the first couple of hours.
Yeah, and you've seen some of the gains for futures winding down as well as we get closer to the opening bell, Anna. But of course, it's still about 4.5 hours away here in the U.S., so we'll have to see how things shake out. As for how things were shaking out in Asia overnight, it really was a mixed session. Overall, you had the MSCI Asia Pacific Index up by about 1/3%. Markets like Japan were higher, but both Hong Kong and China ended the day in the red. There's a couple of competing factors here. On the one hand, you have COVID-19 and a record number of cases being reported in Beijing. That raises concerns once again of a potential lockdown in the Chinese capital. So that was weighing on Chinese equities overnight. You saw that reflected in a 0.6% decline for the CSI 300. But on the other hand, perhaps brighter news is President Biden on his trip in Asia saying that when he gets back, he will discuss those tariffs on Chinese imports with Treasury Secretary Janet Yellen. So that providing a sentiment boost to the Chinese currency. The yuan, the big outperformer in Asian FX today, stronger against the dollar by about 0.4%. We're trading right around that 667 level. And then finally, I would note, while you are seeing a bid into a lot of global bond markets, you actually were still seeing selling pressure evident in New Zealand, specifically at the short end of the curve, up about 4 basis points on the 2-year to 314. Of course, New Zealand's RBNZ will be deciding on Wednesday. Creedy, the market is bracing for a 50 basis point rate hike.
We'll certainly have our eye on that for now, Kailey. But let's take a look at those pre-market trading here in the U.S. session, because you are seeing green on the screen. Now, remember, some of this is going to be purely a technical bounce. We did hit that intraday bear market as of Friday, but I guess some of the concern here is that we didn't close in bear market territory. So in terms of technical definitions, is that bounce really justified? Nevertheless, you have it up 0.4%. How much of that is the tariff conversation you were just referring to, Kailey? How much of that is simply the gains on this idea that perhaps you are seeing a little bit of a weakening dollar against the yuan? You are also seeing some of these other kind of mostly recession talk perhaps wind down as more and more people say this is the dip to buy. Of course, we'll hit that throughout the program as well. Let's look at this cross-asset picture. The 10-year yield hovering around 281 basis points, up 3 basis points from where it was on Friday. You're also seeing some green on screen when it comes to crude, up 0.5%. Bitcoin up 1.3%. But Anna, when it comes to this cross-asset picture, put this in the context of volatility. This is actually a muted picture compared to what we've seen in the last couple of weeks and arguably months.
Yeah, indeed. And Chrissy, here in Europe, we're a little more muted than we were at the start of the trading day. So 2 hours ago, we were much more positive across European equity markets, perhaps reflecting a little bit of the positivity over in the US on Friday. At the end of the session, the option markets expiring, all the excitement attached to that. But then we also had US futures pointing a little bit higher than they do now. So both of those measures of risk appetite dialed back a little bit. The CAC 40 and the FTSE MIB in France and in Italy taking the worst of the losses in Europe today. But we're kind of mixed then across this European equity market picture. In terms of where we are on the individual assets on the move, I can tell you that the energy sector is one sector that is benefiting today from some risk appetite and indeed from higher energy prices. So as that oil price remains fairly buoyant, we see the Stock 600 energy sector up by 1.4%. Basic resources, the mining sector also moving higher. Talking of energy, this is a renewable energy business, a wind turbines business. That stock up by 6.5%. Siemens Gamesa, because Siemens Energy is going to buy the part of this business, or they want to, that they don't already own. A follow-up on a Bloomberg scoop from last week. Here's the euro, up by 0.9% for the euro against the dollar. We've heard from Christine Lagarde saying she thinks we're going to get to the end of negative interest rates in Europe by September. That means 225 basis points in July and September. That's what you could read into that statement. And so the euro goes higher as a result. We're going to be speaking to Christine Lagarde exclusively from the Davos Forum, of course. That's going to be tomorrow during the early part of the European day. And the pound also up by 0.8%. A lot to watch here in terms of the underlying economics. Andrew Bailey of the Bank of England will be speaking later. Also focus on the politics. We'll get that civil servant report into those so-called Partygate gatherings that were happening at Downing Street during the pandemic, Kailey.
All right, Anna, well, in addition to those comments from Andrew Bailey, there is a lot else going on today and, of course, throughout this week, including, as you mentioned, the World Economic Forum taking place in Davos, Switzerland, although the snow is replaced for a little bit more sunshine in this May meeting. Then on Tuesday, we'll get PMI data from Europe as well as the U.S. Plus, Twitter will be holding its annual general meeting on Wednesday when shareholders are expected to vote on Elon Musk's $44 billion takeover offer for the company. Also on Wednesday, Fed minutes will be released. What kind of insight will we be getting into the thinking of the FOMC? And finally, on Thursday, Alibaba will be reporting its earnings results. Creedy.
Yeah, let's stick with that market theme here and go a little bit broader with the S&P 500 flirting with a bear market last week and notching more than $1 trillion in losses. Participants in the latest MLive Pulse survey see more pain to come. Bloomberg's Danny Berger has the details. Danny, break it down for us. Is this the bottom?
Well, only 4% of respondents in our MLive survey said that it was the bottom. This is of more than 1,000 professionals. So judging based off that sentiment, Creedy, I've got bad news for you. Now, the average of those respondents said that they think the bottom will be around 3,500. 26 put it in about a 200 point range. Beyond that, that would indicate a 10% decline from Friday's levels, a 27% decline from January's level. Look, it's this don't fight the Fed mantra. They want to tighten financial conditions to get inflation in check. And of course, falling stock markets, that's something that surely helps tighten financial conditions. Although something that could get even worse, some respondents, a handful of them, saw us hitting the low of the pandemic. Now, in terms of what lifts us out of the bottom, in terms of what gets this economy really going, the responses there were pretty broad, they're pretty macro, and perhaps don't offer too much help. Because let me dig into it. The Fed ending the hiking cycle, that was one thing that would provide an economic boost, but that's definitely not a 2022 story. There's 27% saying China ending COVID zero. There's no sight an end for that, at least for now. And then the last two that were most commonly cited, lower oil and peace in Ukraine, both of those, and at this point, just very unknown.
Danny, thanks very much for the update. Danny Berger on the equity markets. Now, the U.S. says a dozen countries in the Indo-Pacific will join a sweeping economic initiative designed to counter Chinese influence in the region. According to the White House, the nations involved in this framework constitute roughly 40% of global GDP. Meanwhile, President Biden says he'll be talking about U.S. tariffs on Chinese imports with Treasury Secretary Janet Yellen when he gets home from his Asia trip. For more, we're joined by Bloomberg's Chief Asia Economics correspondent Enda Curran. Enda, first on this agreement between 14 or so countries, the U.S. stepping back into the Asian trade sphere, I suppose, post the Trump administration.
Yeah, it's early stages and still a lot of detail to come on this. But as you say, the idea is that the US is trying to get back on the trade story here after they pulled out of the TPP back in 2017. This latest idea, the Indo-Pacific Economic Framework, is meant to bring together, as you mentioned, about a dozen countries. There are 4 pillars in it. It's going to cover areas such as, obviously, climate change, the digital economy, resilience, which is all about preparing economies for future shocks and disasters. That's the kind of headline, but this isn't a formal trade agreement. There's nothing here about reducing tariffs or anything like that. And of course, it's not yet clear whether or not it can get enough political support back in the US. There is opposition in Congress to this latest initiative too. So it's more of a headline push by the US to try and get back in the trade story in Asia rather than anything significant. And as you mentioned, the bigger story today might be that President Biden has acknowledged they may roll back some of those tariffs on Chinese goods.
Well, and that's not the only commentary we got out of President Biden, Enda. He also used some of his strongest language yet on Taiwan specifically. He was speaking at a press briefing in Tokyo and said that the U.S. military would intervene to defend Taiwan in any attack from China. Take a listen.
Are you willing to get involved militarily to defend Taiwan if it comes to that?
Yes.
You are?
That's a commitment we made.
All right, so the president being pretty clear on that, and I can't imagine China will like it.
No, China has already pushed back against these remarks, in fact, calling them deplorable, as China consistently does when it comes to US commentary on Taiwan. In that press conference, President Biden's remarks, as you just heard there, was obviously quite hawkish, but he also went on to say that the US still sticks with the one China policy. There's no change to the US approach to Taiwan, and indeed his staff afterwards are making the point that this is all about giving aid to Taiwan in the event of an invasion, military aid, for example, rather than sending boots on the ground. So it's not really clear what this changes. It's obviously a hawkish statement. It certainly won't go towards helping or reconciling US-China relations, but I think we'll need to hear more from President Biden during the course of his Asia trip as to whether he wants to clarify these remarks further.
Bloomberg's Enda Curran, thank you as always from joining us. And from Hong Kong, let's go to Davos, where executives, politicians, and central bankers are meeting over the next 4 days at the first in-person World Economic Forum in 2 years. Bloomberg's Haslinda Amin is there and joins us now with the Hong Kong Exchange CEO. Haslinda.
And Kriti, it is a windy Davos right now. The hair's blowing all over, but never mind that. As you said, the Hong Kong Exchange CEO is with us, Nicolas Aguzin. Gucho, good to have you with us. I mean, Hong Kong has been slammed by the COVID restrictions imposed by China. We have your IPO market getting hit in a big way at the lowest level in about 9 years. Do you expect things to pick up the rest of the year?
Yeah. Well, what I'd like to look at usually is how's the pipeline? Are companies actually coming out and submitting their filings, their applications? And right now we have between 170 to 180 applications of people that have shown an interest to file for their IPOs. What's happening, I think it's not that related to COVID as much, but like to the environment, the economic environment, and the fact that valuation seems to be a little bit like down and soft. And so people are interested, they're filing. We have almost record level of filing applications, but they still haven't pulled the trigger and in a significant way.
When do you expect the trigger to be pulled? Because right now it is impacting your earnings. In fact, you're looking at earnings at the lowest level in 5 years. When do you see a reversal of that? When can you grow that again?
Yeah. Well, last year we had record earnings. I mean, it was all-time record. I mean, so when we look at the numbers are actually quite good if we look at the last 5 years. And what we see is that the general sentiment has lowered the amount of trading that happened. I mean, there's less trading, and at the same time, valuations are lower. So what we see is that eventually the market will come back. It always has. I mean, there's like periods where valuation seems a little bit lower, then they pick up. So, I mean, this time will pass. I cannot predict whether that's 2 months, 6 months, 7 months. What I know is that if I take a bit of a longer term approach and I look at 5, 10 years, the opportunities around China and capital markets are great.
It's been challenging for you the past 1 year. In fact, you took over as CEO of Hong Kong Exchange almost 1 year to the day, 24th of May. You did a trip to China in April. What was the conversation like? What was the message you sent across to China?
Yeah, we have a lot of stakeholders in China. We have a lot of partnerships. We forged some new partnerships, like with the China Climate Exchange. I mean, and so there's a lot of like positive interactions that we have. Now, the key message that I heard is around the importance of Hong Kong developing and continuing to develop as a key international financial center. I mean, a global international financial center with preeminence. So that is very important, and that was, very, very clear. We have a unique role as the most international city of China and the most Chinese city outside of the mainland.
More cross-border projects expected?
Yeah, I mean, I think there is increasing, the opening up of China will continue.
I want to touch on the LME, the volatility that we saw on that fateful day, prompting the likes of Ken Griffin to say that, it was the worst day he's had in his entire career. You endorsed the CEO, Matt Chamberlain, yet again, and you said that you agreed with how it was managed. But having said that, 3 investigations are ongoing right now, looking at whether or not something had been done wrong. If it's proven that something wrong was done, would you take personal responsibility for it?
Yeah, I mean, clearly it was a very difficult moment for the commodity markets, and there was a lot of tension around that time and those few days. I do think that the decisions that the management of LME took, the executive management took around that time, were in the interest of the market as a whole, and considering that. And so, I mean, I have to, endorse the decisions that they've taken, because they were thinking about the overall market.
Is there something LME could have done that it didn't do on hindsight?
A lot of the reviews, independent reviews that are taking place at this point, we'll see if there are things that could have been done better. Of course, we support evaluating the market as a whole, how the market operates, what are the changes that could be done in terms of market structure. But I mean, I do believe that if there's something to be done, we'll do it.
What can be done to regain investor confidence at this point?
We have to make sure that the market is, a trustworthy market, and that there's confidence in the type of investors that we have, in the type of products that we're delivering, and that will take some time, because I mean there's a lot of things that are being done around that area.
Investigations are being done even by the Bank of England. Do you expect changes, a tightening of any sort, as a result of that investigation?
I mean, the reviews that are carried out, including some reviews that we are carrying out, I mean, are with the objective of trying to see how we can make the market better. I mean, that's a key focus.
Guicho, the markets have been slammed, to say the least. 7 weeks of declines. Is that a reflection of how investors view the global economy? What's your take on it?
It's interesting that we're now here in Davos after more than 2 years that we couldn't attend in person. And if I look back at the last Davos and today, I mean, at that point, we didn't have any COVID, really. We didn't have any of the, situations around the conflicts of Ukraine and Russia. It was the inflationary pressures were not there at that point. So we do have a complicated global macro environment. It is very soft in terms of like the outlook of many investors, and the market is just reflecting that.
It's complicated for Jerome Powell trying to navigate this soft landing. Do you think he can have a soft landing?
I think that the inflationary pressures will continue for some time.
Nicolas Aguzin, always good to have you with us.
Thank you very much.
Finally, we made it. And that was the CEO of Hong Kong Exchange, Nicolas Aguzin there. Back to you guys.
All right, Bloomberg's Linda Aman in Davos with the Hong Kong Exchange CEO. Thank you so much. And of course, Haas will be back with us later on this hour. First, though, we want to take a look at some stocks moving in pre-market trading here in the U.S. And really, there is one story that is capturing attention this morning. Not necessarily Merger Monday, but at least Merger Talks Monday. Bloomberg reporting overnight that Broadcom is in talks to acquire VMware, which is a cloud computing company, would be part of Broadcom's push to expand into that highly specialized area of software. Now, according to our reporting, the talks are ongoing. There's no guarantee a deal will happen. Also, not sure what the offer price would be. But remember, VMware is a $40 billion company. So if you assume the typical premium that is put in place on deals like these, this could be a really, really large one. And you are seeing that reflected in pre-market trading this morning. VMware surging 18% in early hours, trading at about $113 a share. Broadcom, on the other hand, is slightly lower in the pre-market trade, down about 2.5%, Anna.
Kailey, coming up on the programme, more from Davos. Dinesh Kara, State Bank of India chairman, will be joining us. We'll also talk to Stevie Ackerson, Saxo Bank's CIO. That's coming up in this hour. He says the economic agenda is moving to a better and more rational place. We'll get details. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kailey Leinz in New York. Matt Miller is off today. Let's get to the market analysis. Noor Al-Ali, Bloomberg Markets live editor, joins us here in London. Noor, really nice to have you with us. We started off with some sort of appetite for risk assets, stocks moving higher in Europe. That's faded a little bit. Something that's been pretty consistent and has intensified has been dollar weakness this morning. And yes, we've got some additional lines on the euro that add to strength there. But why the real focus on dollar weakness, do you think?
You know, it's a lot of headwinds that are coming the dollar's way. Definitely, we're now starting to seeing a lot of central banks playing catch up with the Fed, which could potentially add pressure on the dollar because there is the narrative that perhaps the Fed has maybe, waited too long to raise rates. You do have potentially even lifting the tariffs on China, even though we're in early talks there. Could add another stressor on the dollar versus the yuan, now the euro as well. You do have a lot that's going on against the dollar, which is why we're seeing some weakness.
Noor, talk to us a little bit about the ripple effects of that dollar weakness. When you think a weaker dollar, immediately what comes to mind is higher commodities, but there are broader implications as well. Walk us through them.
I think about gold, Kriti, and I think that's a really good question because there is that cross-asset implication here. Gold has been gaining strength, on the back of a weaker dollar. I don't know if that's going to last, though. I do think that gold, in of itself, has a stronger correlation with rates, and we've seen that relationship and the strength of that relationship perhaps could give us a better insight on what gold goes into. So, if you're in the camp that thinks higher rates are up ahead, then you're probably in the same camp that thinks gold is not going to sustain this rally.
Well, on the subject of higher rates, you also had ECB President Christine Lagarde saying that negative rates will be over by the end of the third quarter. How are we seeing the market react to that?
I think the market is finally saying, finally. I mean, we've already seen this. We've already been pricing this. Money markets have been pricing in higher, have been betting on higher interest rates. On the Bloomberg terminal, you can see this through the function WRP. It's a fantastic function, apologies. And I think what's really interesting about this is that you've seen a bit of a bounce for the euro. Yields maybe rose a little bit, but the reaction hasn't been as vast. This is predominantly because markets have already been pricing this in, and finally the ECB is reacting to what the market has been seeing. I mean, at this point, will we be in a recession? I think that's what's on everyone's mind, and that's why you've seen stocks also fade slightly in this morning.
All right, Noor Ali of Bloomberg Markets Live, thank you so much for joining us. Now, keeping you up to date with news from around the world, here's the first word. The International Monetary Fund is warning against global economic fragmentation stemming from the war in Ukraine. It says that undoing decades of integration will make the world poorer and more dangerous. IMF Managing Director Kristalina Georgieva says nations should lower trade barriers to alleviate shortages and lower prices. President Biden is seeking to reassure Americans about the current Monkey Pox outbreak. At a news conference in Tokyo, the president said it was unlikely to cause a pandemic on the scale of the coronavirus. He said the U.S. has enough smallpox vaccines stockpiled to deal with the outbreak. In Australia, the Labor Party's Anthony Albanese has been sworn in as Prime Minister. Albanese defeated Prime Minister Scott Morrison in an election held on Saturday. He's promising swift action on climate change, greater gender equality, and improved wage growth. And in New York, police are searching for a man who shot and killed a Goldman Sachs employee on a subway train. Daniel Enriquez was 48 and had worked for Goldman since 2013. Goldman calls the death a senseless tragedy. An increase in assaults on New York's subway system has prompted Mayor Eric Adams to boost the number of officers on patrol. And of course, Anna, it was not so long ago that we saw the mass shooting on a subway train in Brooklyn, New York. It really goes to show the challenges of not just crime in New York, but also as banks, Wall Street in particular, and companies across the board are pushing people to return to the office, having to do so in public transport. This feeds into whether or not people really want to do that.
Yeah, adds into the return to office debate. Tragic news there. Coming up on this programme, we'll get back to Davos. We'll bring you an interview with the State Bank of India chairman. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. U.S. stock futures rose after the S&P 500 narrowly missed a bear market close. Still, a new survey of finance professionals sees the index losing at least another 10% before bottoming out. President Biden said the U.S. military would intervene to defend Taiwan in any attack from China. Those comments appeared to break the long-standing U.S. policy of so-called strategic ambiguity, but then those comments were later walked back by the White House. And the Davos Forum is back after a 2-year pandemic-enforced hiatus. There are fewer Russians and fewer billionaires and no snow, but we will hear from the chairman of the State Bank of India in just a few moments' time. Good morning, everybody. I'm Anna Edwards in London with Kriti Gupta and Kailey Leinz over in New York. Matt Miller is off today. And risk assets, Kriti, then just losing a little of their momentum as we've gone through the first couple of hours of the European trading day.
Yeah, and I can remember waking up and actually seeing stocks, futures up over, I think, 1.5%. You have certainly seen some of that steam roll out of the markets. But I think an important part of the equation is that whether this is fundamental or whether this is technical, because remember, we did, as you pointed out, hit that intraday bear market on Friday, but we did not close in bear market territory territory, and that seems to be the loophole, if you will, on the technical basis. That nevertheless, you did see a bounce back just given the volatility of last week, and I believe that wraps up 7 weeks of losses. So once again, in that context, natural to see some green on the screen. There is a fundamental driver as well. You did have President Biden reiterate, remember he has made these comments before, that they are considering potentially looking at some of the tariffs against China. Remember, that has been a major kind of contributor to inflation in terms of import costs, especially for, say, producers or factory owners. That's something to keep in mind. But nevertheless, take a look at the cross-asset picture here, because the 10-year yield at 282 basis points, up about 4 basis points here from the Friday session. Also keep in mind, though, the dollar actually weaker to the tune of 0.7%. Compare that to the yields picture. You're seeing that divergence, which we usually don't see. That tells you that one of the two is likely going to snap back. Also keep an eye on Bitcoin, up 1.5%, Kailey.
All right, Creedy. Well, I also am keeping an eye on some maybe potential deal news today, or at least reports of deal talks between Broadcom and VMware. Of course, Broadcom, the big chip maker, VMware, the cloud computing company, it would be a part of Broadcom's push into specialized software. As a result, you are seeing VMware surging in early hours. It's up about 19%, trading around $114 a share. Remember, this is a company worth about $40 billion in market valuation, so interesting to see if this deal does go through, which according to our reporting is no guarantee what kind of premium will be put on the stock. Broadcom, on the other hand, down about 3.4% in early hours trading. And of course, another story we continue to focus is the Monkey Pox outbreak here in the U.S. President Biden says, don't worry, it won't be a pandemic on the scale of COVID-19, but nonetheless, you are still seeing some areas of the market reacting to it, specifically those stocks of companies that make therapies to combat viral outbreaks. So that includes SIGA Technologies. It's up 38% in the early hours trade. You also have Cimerix up by about 21% before the bell, Anna.
And of course, monkeypox, a topic of conversation in parts of Asia and here in Europe as well, Kailey. We are seeing those strengths to European equities, not as much as we were seeing earlier on, as I was just discussing with Chrissy, but we are seeing them stronger this morning, up by 0.4% in aggregate on the stock 600. Kailey was just talking about a bit of M&A in the United States. Well, there's some of that here in Europe as well. This is Siemens Gamesa, which is a wind turbines business based in Spain. Their big shareholder, which is Siemens Energy, has decided it wants to buy the part of the business it does not already own. And as a result, we see the stock up by more than 6%. That was something we certainly were reporting on as likely to happen last week here at Bloomberg. Here's the euro, up by 1%. We're going to hear from Christine Lagarde. She'll speak to Bloomberg exclusively tomorrow. And in the run-up to that, she's been saying today that she sees the end of negative interest rates by September. So we're at minus 50 right now from the ECB. So that means, what, 25 in July, 25 again in September, takes us up to 0. And the euro likes that, up by, as I say, over 1%. Keep an eye on the pound as well, because this is a broad dollar weakness story, as we were discussing with our colleague Noura Lally from the Markets Live blog as well. Keep an eye on the politics here in the UK on the pound as well. Kailey.
All right, Anna, well, let's return to the stock story here in the U.S. because, of course, as we mentioned, the S&P 500 on Friday narrowly avoiding plunging into a bear market on a closing basis. But Morgan Stanley's Mike Wilson says it's too early to turn optimistic on stocks, writing in a note today, quote, equity clients are bearish, a necessary condition for a sustainable low, but an insufficient one. Given the risks to growth are just emerging, it is too early to get bullish. Joining us now is Steen Jacobsen, Saxo Bank CIO. Steen, what do you think? How bullish or bearish are you feeling this morning?
Well, I have the same base position I've had since November with the Fed pivot that we saw, and that is that we need to be defensive. We are nowhere close to a panic in the market. We're starting to see some hedge fund fail. We're starting to see momentum going out, and clearly the market is impacted by this fact that a lot of the constituents of the high-flying stock has been basically a zero coupon 35-year bond. So the convexity is now biting them. And as Mr. Wilson says, basically we haven't even started the quantitative tightening. That will happen in June. So for me, it's more of the same. The script has been the same for the last 7 weeks. But in essence, this is all about the major central banks is now kind of indicating that we will see no liquidity provision and inflation remains priority 1, 2, 3, and all the way through to number 50 priority.
Well, as you say, Steen, you've held these views for quite some time. And I was looking back to one of your previous times that you joined us on this program when you had just put out your 10 outrageous predictions for 2022 at the tail end of 2021. Among them, the plan to end fossil fuels gets a rain check. Of course, we've seen a pivot back to fossil fuels given the war in Ukraine. Another one on here, U.S. inflation reaches above 15% on a wage price spiral. Of course, we're not at 15 yet, but we do have an 11 handle on PPI. Steen, are you surprised about how more right than wrong you were on some of these things?
Well, of course, as you know, they are called outrageous prediction for a reason, and the 15% is entirely picked because that was the peak back in the 1980s. But I'm not surprised at the underlying inflation. What I'm surprised about is that the market continues to feel that it needs to trade peak inflation at all times. Any show I go on, any interview I do, any clients I talk to, the first question is this peak inflation? And I have to tell them, well, when the fundamental change of why we have inflation, then inflation will have peaked. We have done absolutely nothing in that energy transmission. We have done absolutely nothing in terms of doing anything on the monetary tightening. And above everything else, we are now moving into a phase where we have to pay the price for the excess liquidity that's been in the system.
Okay, and yet you say the economic agenda is moving to a better and more rational place, Steen. Is that because, I mean, that's because you like that we're heading towards a slightly, maybe higher interest rate environment? Or give us the context between that. What looks so bright to you?
Exactly, Anna. So my premise is that when you have negative real rates, it's really equal to that you have no productivity going into the future. So when you have an increase in price discovery from the market itself, and on top of that, that you start to move into positive real rates or even just moving the needle to zero, what you're then having is that the market needs to find higher relative return on the capital invested. The freebies, the ability to just be rentiers and basically taking rental income is disappearing, and we need to move an agenda which is entirely built on productivity. So what we as market players tend to forget is that at the end of the day, the only thing that keeps an economy growing is productivity. Productivity can almost entirely only happen when you have a positive real yield, because a negative real yield is basically saying to you something like green transformation can only happen if you subsidize it by keeping interest rate too low. So yes, Anna, very positive that this is bringing the rooster home to right now.
Okay, so you think that that's positive then in terms of what it means for productivity, Steen. What about what we're going to see on the fiscal side? We've seen some governments in Europe talking about more defence spending as a result of war in Europe. How substantial is that going to be? How substantial a driver is that for Europe's economy?
It's big. And I think if anyone wants to draw and look at productivity, just to look at what happened to European productivity since the Berlin Wall came down in '89. Of course, the Berlin Wall also was the peak of military spending because of the former so-called Cold War. And what we've done over the past many decades is that we have kept military spending very low. But what we forget there, of course, is that the military expenditure and fiscal spending actually very often have a very private spillover effect. It's the private sector that drives this. It's the private sector that benefits from some of the innovation that happens in that space. And the most important military expenditure you can have right now is telecommunication, the ability to navigate the internet, and certainly also communication overall. So yes, Anna, I actually one of the few people who thinks that defense is not only ESG compliant because it maintains our constitutional right and our democracy, but is also from a capital allocation perspective, very, very efficient use of capital, because the private system simply cannot do research and development. They get too over-focused on buybacks and paying out dividends.
You mentioned, we're talking about defense here, but defense is not the only major export of, say, even the United States. You're looking at commodities, you're looking at, of course, technology as well. I have to ask and put all this into the context of a dollar that has been strengthening. Of course, today it is much, much weaker, but I'm curious about the ripple effects of the dollar as we talk about this inflationary period, and as our former guest talked about, other central banks finally catching up to what the Federal Reserve is doing.
Yeah, so, if you only had one indicator for the liquidity in the world, it would be the strength of the dollar. So right now, we've just coming off a peak high dollar, which indicate that the liquidity is tightening globally. What then translate into the emerging market and non-US is that the euro dollar market, so the dollar that is traded outside the US, gets too expensive relatively. It slows like the global demand, and then ultimately it drives the US dollar down, because the only way this system can reset is a lower dollar. So sometime in within the next 3 to 6 months, we'll probably reach the peak rate in terms of interest rate. And then the only thing left in terms of attracting capital to the US is a weaker dollar. So this is probably not the 9th inning, but it's certainly the 7th or the 8th inning we're in terms of the dollar strength, simply because we are reaching and getting very close to what is the terminal rate that the US economy can sustain with the amount of debt it has right now.
So if we're in the 7th or 8th inning, we're not yet at the 9th. Does that mean that there might be broader implications, for example, a sort of debt crisis when it comes to a lot of these emerging markets? The IMF director, Kristalina Georgieva, has notably warned about a sovereign debt crisis of some sort among these emerging market countries. We've seen it with Sri Lanka, for example. Do you see something like that before you start to see that pullback in the dollar?
Yeah, and we're already seeing it, as you indicate. Sri Lanka has had to default. We have Pakistan, Egypt, and a number of other countries already applying for additional help being issued from the IMF, which is on the record. So yes, it is happening, and we also have a food crisis incoming. And don't forget, the amount of people who live in poverty right now is increasing almost daily by millions of people due to this inflated food prices, but also the energy prices that sits very centered to why the food prices are higher. So yes, we unfortunately have to move to sort of the final stage, the panic, the reset of the system before we move to what we just discussed in terms of productivity and a market that can see a bottom coming up.
Steen, Creedy there was just talking about the emerging markets. Where regionally do you want to be allocated right now?
I like China. I think China is, of course, seems to be extending the lockdown, but anyone who observes China will know that when President Xi walks out on the stage in September or October, they will start one of the biggest fiscal impulses in human history, simply because they have lost not only the first quarter, but also now the second term in growth. And the only way a system like the Chinese can re-engineer itself is to spend fiscally. So there's another goal similar to what we saw in 7 and 8 that will catapult, of course, commodity prices higher globally, and it will certainly make sure that inflation stays way above the level that Fed and ECB is still dreaming, hoping, and wanting to see next year.
Okay, Steen, what will happen then if China does spend fiscally, as you suggest, but that policy kind of works in the opposite direction from the COVID zero policy, which is obviously weighing on the Chinese economy?
So, you know, the Chinese economy needs help in many shapes and form. At the center of the Chinese system, at the center of any planned system, sits the banking system. So the banking system will need to get a higher margin. This banking system needs to be lending out. And as such, that will elevate and float all boats in the system. But don't forget, Anna, and you know this, the Chinese equity market is not an equity market in the US with a multitude of different agents in it. It's really a lack of a better word, it's a speculative one-dimensional market. When the Chinese authority tells you that the market has reached a bottom, it's reached a bottom, and then it starts to move up. And I think if you look on a relative basis, the technology names in China is now very cheap, and most of the names in China is down more than 50%. So from a value perspective, in terms of the emerging market exposure I want, that China is definitely my number one uptake in terms of doing the risk allocation here. But again, as you know, Anna, I'm a very defensive mode right now, and I continue to play a multi-asset strategy, which is long volatility, long the convexity that is ongoing in terms of the interest rate right now.
All right, Steen Jacobsen, Saxo Bank CIO, thank you so much for joining us and giving us some of your insight this morning. Let's turn our eyes now back to Davos, Switzerland. Ukrainian President Vladimir Zelensky is currently delivering a virtual address at the World Economic Forum. He is urging more sanctions against Russia, including specifically Russian IT companies, and reiterating his call for sanctions against Russian oil. He also invited companies that leave Russia to Ukraine and says that Ukraine needs more weapons and financing. It looks like Vladimir Zelensky has just wrapped up his remarks, but of course we will continue to monitor all of the happenings and interviews at that World Economic Forum in Davos, Switzerland throughout the day. This is Bloomberg.
What is your dream? How do you see Ukraine in the future? What is your vision for Ukraine in the future?
Дуже дякую за запитання. Воно
Thank you for this question.
і складне, і просте, і філософське.
Complex, yet simple one, a philosophical one, and very specific one.
Вам, я як президент воюючої держави.
Just to be frank, I'm Myself, being the president of a state at war, we already are thinking, what is the Ukraine of today? Because every morning starts for me with getting the number of people who were killed in the past 24 hours. Unfortunately, according to the statistics, we've got 87 dead bodies, 87 victims today in Islam.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Intel CEO Pat Gelsinger. That's at 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kailey Leinz over in New York. Now back to Davos, where executives, politicians and central bankers are all meeting over the next 4 days at the first in-person World Economic Forum in 2 years. Credit Suisse CEO spoke to Bloomberg's Francine Lacqua about the global economy.
With the high inflation shocks that we see now in certain areas of this world, it's very clear that people are somewhat insecure, they are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year. They have come down. And if you look at certain markets, whether it's equity markets or high yield markets, they have clearly come under pressure.
I mean, under pressure, they've been a bit crazy.
Yeah, well, they're basically been pretty quiet, let's put it this way. But our clients, they don't panic. You know, they are looking at how things develop. And they stay engaged, and that's very important for our wealth management clients and our wealth management relationship managers, that they stay in front of the clients, and that's what I'm really focused on.
So there's no, you're not seeing any outflows, they're still fully invested?
Well, what we did see, like many of our competitors, is some deleveraging as part of, you know, assets under management going down, certain equity prices going down, but some deleveraging, especially in Asia. And obviously with what happened in Russia and in some other parts, that AUM have gone down, but no outflows as such, no.
Does it actually hurt your ability to collect some of the fees in certain parts of the markets with some of your wealthy clients, or not so much?
Well, if you look at our three revenue streams, so net interest has come under pressure because we had lower lending volumes. But now with interest rates going up, that should be a positive element going forward. Recurring revenues have also come down because of lower AUMs. And transactional revenues actually have started to stabilize now. Volatility sometimes is a good thing for transactional revenues, so have started to pick up. But it's clear that 2022 will be at lower levels than last year.
That was the Credit Suisse CEO Thomas Gottstein speaking to Bloomberg's Francine Lacqua in Davos. It was delayed, so no snow because of the time of year, but you still get helicopters. Apologies for the noise of the helicopters at the start of that interview. More Davos when we return. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kailey Leinz in New York and Anna Edwards in London. Matt Miller is off today. And Anna, usually at about this time, we go to Tom Keene with his single best chart. But given that he is on the not so snowy hills of Davos, I thought I'd take over and throw in my chart of the day here. And I really want to put that bear market that we're looking at in context when it comes to the S&P 500. For our radio audience, stick with me here. We're looking at the peak to trough drawdown so far that we've seen in the S&P 500. So we know that it hit an intraday bear market territory territory yesterday. But if you go all the way back to 1929 and put this into some perspective, the biggest sell-offs when it comes to recessions, when it comes to inflation, stagflation, have actually been 40% drops. Look at it in 1972, in 2001, even in 2008, and you aren't seeing that. This current drop looks a little bit more like 1987 Black Monday panic, or 1962 the Kennedy slide ending with the Cuban Missile Crisis. So Anna, I don't want to say this isn't that bad, because it is. There is some extreme selling pressure, but put this into history, and it looks like this is more of one of the more muted times in history where you're seeing that bear market.
Yeah, and I don't know if that comes as a comfort for those who are long with the markets, or whether it makes people think, oh, there's more to come, and we'll watch for how much weaker we get from here. And Kriti, thinking about that, there are plenty of events taking place, data releases, speakers this week that could act as catalysts in either direction for these markets. We have the Fed's Bostic and George speaking, the Bank of England's Bailey speaking today. And in terms of the data, we get PMIs from a whole host of countries tomorrow, which is going to be really important as we've seen this pivot in market thinking away from, of course, the focus on inflation. We won't lose sight of that, but also adding in a focus on growth.
Yeah, there's so many other cross-asset pictures to look at too. The commodity story, the dollar story, even the bond story, all of which are ultimately going to reflect in what happens to the stock market.
Yeah, absolutely. And later on this week, we'll get, of course, a lot of retailers reporting their results. And we all remember what we learned about the strength or lack of strength of the US retail customer last week. So certainly a big focus on retail names once again. That is it for Early Edition. Surveillance is up ahead. Lots more coming to you from the slopes of Davos. They'll be speaking to Joseph Stiglitz, amongst others. This is Bloomberg.